So in this video, I'm going to show you why the RSI is a terrible option for your Forex charts. Now I understand there are a few different types of people watching this. Either you are already a fan of no-nonsense Forex and you've seen the Dirty Dozen video and you understand why I do what I do, and you are probably never ever going to use the RSI. There are some of you who are just starting out trading for the first time and don't know what to use and are looking for direction. And videos like this are tailor-made just for you. And there are some of you who are using the RSI right now and actually like it. You guys are the ones that I need to talk to the most. Watch this entire video, and at the end of it, if you are still on board with the RSI, I cannot stop you. At the end of the day, it is your money. But for the rest of you too, there's a lot of good knowledge in this video, and I'm going to go to my own charts towards the end. Don't fast forward all the way to the end, because it's not going to make a whole lot of sense if you do. But I'm going to cover quite a bit here. So if you are new to the channel and you have not seen the Dirty Dozen video, here is the list. These are 12 of the top tools that I can guarantee you, if you're actively trading Forex right now and if you have not seen one of my videos before, that you are using at least one of these. And in that video, which I will link below so you can see it later, I gave a little 30-second to 45-second blurb on every one of these, showing people how faulty and outdated and ridiculous these tools are. And I also said in that video that I would go back and make an individual video on every single one of these. And it is the RSI's turn. And I wanted to start here because out of pure indicators, in terms of Google searches that these get, Googling RSI or Relative Strength Index will yield you more Google searches than anything else on this entire list when it comes to pure indicators. And I want to kind of keep the indicators train going here. So, if you didn't see the Dirty Dozen video already, here is what I said about the RSI. So first off, it was created in 1978. Spot Forex trading, as you and I know it, wasn't even really around until 1996. And this thing was created almost 20 years before it. And it was created for stock trading, which does not operate the same way Forex does. Mainly because in stock trading, things can actually be overbought and oversold. But in Forex, that's not the case. Watch my reversals video. I'll link that one down below too. Stocks actually have intrinsic value. They can, by definition, be overbought or oversold. Currency pairs can go as high or low as they want until a government entity actually steps in and does something about it. But that can happen 3,000 to 5,000 pips down the road. So just by how old this thing is, what it was actually created for, which was not Forex, and what it is trying to do, you can just stop here. And many people saw this and said, okay, yeah, I'm not using this anymore. That's all the information I need, all the evidence I need. But some of you are going to be a little bit of a tougher sell. So let's go ahead and move on. Now, what I really want to know, and the people who use the RSI right now are the people I'm talking to, why do you use it? I already know the reasons why, and we're going to go over those reasons one by one, and I'm going to try to dispel them one by one to see if I can talk you off this ledge. First off, you probably use it because it's very easy to use, and I agree, it is. For those of you who are brand new to Forex trading and don't know how to use the RSI, it goes something like this. Now, there are a couple different ways to use it, but the way almost everybody who uses this indicator will actually use it for is they're going to wait until this line gets down into, I'm using air quotes, oversold territory. And then they wait until the line comes back up across the 30. You set your levels at 70 and 30. When this line gets back across the 30, that is a signal for you to go long, because it is confirming what they think is a reversal. And so then conversely, if the line were to ever get up into this overbought territory above 70, you would wait for it to come back down. And once it does, that will give you a short entry. Real simple, super easy to use, I agree. But this point will come into play later. All right, let's keep going. Why else might you use it? Well, it's extremely popular. You see a lot of people on Twitter and on different websites and even on YouTube using the RSI. And you figure, well, if this many people are using it, I should probably be using it too. Who doesn't want to be popular? Who doesn't want to follow the crowd? These people seem like they know what they're doing. And again, between RSI indicator and relative strength index, this thing gets about 25,000 searches on Google every single month. If you didn't know any better, and when you first started out you didn't know any better, you would think, well, this is the way to go. Now, fans of no-nonsense Forex are already screaming the answer at you. If you're popular, you're done. Because you are now part of that 99% that, and this number is low. When I say low, it's probably closer to 100% than it is 99%. 99% of traders Forex traders who either lose money, break even, or never quite make enough money to get where they can actually distance themselves from their regular job and start doing this for a living, which is what most people, almost everybody I've talked to that actually trades, ultimately want to do. And if you are doing the things in Forex that are popular, this is where you are going to end up. Because another video I've made, probably the most important video I've made up to this point, the big banks video. Big banks eat the popular kids. They find out where the popular money is going, and they take it. They move by moving price the other way. It's really, really simple. If you don't understand what I'm saying, please go watch this video after you're done. I'm going to link that one below too. But just know this, so many people use the RSI, and if it is giving so many people a long signal, for example, you have become a huge blip on the big bank's radar, and that is giving them permission to take price the other way whenever they want. They might give you a win here and there just to keep you in the game. We'll talk about that in a bit too. But this is not stock trading. This is not the herd mentality. The mechanics of this market move the exact opposite. You do not want to be popular at all. And if you are doing anything that would make it so, that would make you that way, you need to change right away. And things like that big banks video will explain further. Because I know when I first tell people this, it's kind of hard to believe. So another reason you use it is you were shown from the start. This is a big one. And I have major problems with Forex education in the way it teaches people from the start. And that's a big reason why videos like this exist. People have said, hey, you should put up your own training course, and I don't want to do that. I would rather wait for you to go get your training somewhere else and say, okay, now that you've learned this, here's what you should actually do. But when you were first taught Forex from the start, it was super exciting because you learned all these little tools and indicators, and I guarantee you, no matter who taught you, every example they gave you worked like a charm. Gave you that perfect entry every time, which is super, super unrealistic. You learn that the hard way as soon as you get out there and start trading yourself. But the RSI, because it is so easy to use and easy to read, told you that with the least amount of effort, all I have to do is put this on my chart, and every time it gives me a signal, just take it. It's super easy. And that is a reason why so many people still use it and put it on their charts. But did you ever once question the people that were showing you how to trade? You probably didn't. Here's some dirty little secrets about anybody who's associated with Forex education at the beginner level. Most of them don't actually trade. If people are in the Forex industry and they are making money by being instructors, by being news reporters, whatever they do, most of them don't actually have to trade anymore. Believe me, if they did, if they had to rely on the money they actually made by trading, they wouldn't be using hardly any of the things they were going to show you because they would lose. But I'm telling you, you right now could just take all the things you learned when you first learned how to trade Forex, repackage them, and put them under your own name and put it out there and make money. People would buy it, especially if you're good at marketing, because people just don't know any better. They're not going to question your ability to trade yourself. They just want to learn. And showing them things, dumb things like the RSI and Fibonacci and stuff like that, and especially if you only show them examples that work, well, you're going to get them on your side every time. This is a problem. Also, most of these people don't even know about other indicators. They know about what's on the dirty dozen and maybe 2 or 3 other tools they can put on their chart, and their knowledge stops there. Most traders' knowledge stops there. There are thousands of indicators and tools that you can put on your Forex chart at any given time. Most people only know about 15 to 20 maximum. I am blown away by this. Never once did these people stop and say, you know what, I just keep losing. These indicators are terrible. Maybe there is another way. I did that, and over time I had tested thousands of indicators on all different time frames, on all different currency pairs, to get to the ones I use now. And guess what, guys? There are indicators that were actually developed by Forex traders in this century for the purpose of Forex trading, which is the opposite of everything you saw on that Dirty Dozen video. But did any of these instructors ever have the gall to show it to you? No, because they didn't know either. They showed you the RSI, and that's why you're losing. And I've alluded to this already, the worst thing about it is, and this isn't just in education, this is everywhere. This is all over Twitter, for one. And I'm not the type to talk shit to people on Twitter, but you really, really want to when you see things like this, because it just irks people like me. When you first saw the examples they showed you, you thought to yourself, wow, look at how well this works. It must work every time. What you didn't know is that they selected the perfect currency pair on the perfect time frame at that one perfect moment in time where this indicator worked really, really well. And shit like that drives me crazy. And the funniest part about when they do it with the RSI is if you actually look at it on some of these examples, it still doesn't work. I'll show you. This is great. I don't know who did this or where this is from, but this is a clear example of you being lazy and thinking this thing works when it actually doesn't. So here's the overbought side of things, and then there's two different times it gave you a signal to go short, and price did eventually go short. Over here, two different times you could have gone long, and price eventually went long. But let's look at this more closely. So your first signal to go short is here, all right? Right here. Now I'm using a mouse, so I'm going to go as straight up as I can. So that signal was on this candle right here. Now the very next candle shot upward. This candle took out a lot of people's stop losses. And after it closed, a lot of people probably looked at that, because that's an engulfing candle, which for a lot of people is a sign that price is going the other way. And they said, yeah, it's time to exit and move on. Now, if you weren't one of those people, that's fine. If you would have said, okay, my stop loss would have actually been up here or maybe even up here, okay, I'll go with that. But for a lot of people, they exited right after this candle. And then the indicator itself moved back into that overbought territory with this candle right here. So now your beloved indicator is telling you that this thing is back into overbought territory. So are you going to go short at this point? No. You've just been given another reason to exit. So let's say you did not exit and you're still in this trade. Okay. So it goes down a little bit back to where you bought it, went back up, and then you finally get this down candle here. Now, if you're honestly sitting there saying, well, this would have hit my take profit mark, I will say probably not. If you really are somebody who had their stop loss this high, your take profit level was probably somewhere down here, if not lower. So I will call bullshit on that. And then price went back up again, and then down and back up again. If you are one of the very, very few people who are still in this trade, and believe you me, if you are a sane-minded, disciplined trader, you would have been out of this trade a long time ago. But if for some reason you're a lunatic and you stayed in it, you would have actually reaped the rewards to a point and rode it on the way down. So good for you if that was the case. I don't like your chances going forward if that's the type of trader you are. But just understand that most people would have been out a long time ago and not have made any money from this move here. Because especially when this thing was doing a whole bunch of nothing, this indicator was going down. Usually when people see indicators going down and price going nowhere, that's yet another sign to exit. All right? So let's go look at the more ridiculous example, which are these two longs right here. Let's start with this one. This one gave you a long entry on this candle right here, and then what immediately happened after that? These two huge short candles. Nobody was left in this trade. If you're the type of person that said, well, I would have been because my stop loss is way down here, I don't believe you. And if for some reason you are, it will not be long until you lose all of your money if that's how you approach trading. Any sane-minded trader would have been long gone, even way before price is allowed to get this far down. That was a huge loss. All right, so let's wait for the next long entry, which is this arrow right here. So that is probably this candle right here. So this one gave you a whole lot of nothing, and then the very next day, boom, this huge Marubozu short candle down. Bad, bad news. Again, nobody would have been left in this long trade. But if you were being lazy and looking at it in hindsight, you would have said, wow, it was overbought there and price went down. It was oversold here and price went up. But if you're looking at it as an actual trader, even when it works, it just gave you 4 different losses. How about that? The RSI is one of the few indicators out there that even when it works, it doesn't work. But look, I'm not mad at you for using it. You have a lot of reasons why, especially starting out, that you would have used it. These are perfectly valid reasons if you didn't know any better. But another big reason that I haven't even touched on yet is the RSI is one of the most televised indicators out there. If you're somebody who watches CNBC or Bloomberg, you will, whenever they actually make some desperate attempt to show technical analysis, you will see this indicator a lot. So Bloomberg mostly does stocks, but this is an example of a chart you would see with them. As you see this weekly RSI below, and then here is another chart. So they do have a habit of using it, and why do they use it? Because it's very easy to see, like we said before. People who watch these shows usually know nothing about technical analysis, and so you need to show them the easiest, dumbest thing you can possibly show them, or else they're not going to understand what you're doing. Now, Bloomberg actually has the decency to put currencies up every once in a while, and they'll use the RSI too, because especially when you shade in these little overbought and oversold levels, they're a lot easier to see and understand than an indicator that actually works. But if you were the type of person that started using the RSI and then saw all these smart people on TV using it too, no wonder you're still using it now, and no wonder you're still in the back of your mind trying to argue me on these points. But let's take a look at what really happens on these shows. For one, they are not technical traders. Bloomberg, and especially CNBC, spends pretty much all their time on fundamental analysis, because that's what the people who watch those shows want to see. Most of these people, too, are not even traders. Again, they wear nice suits. They have these prestigious jobs. They speak really well. They're not actual traders more often than not. And if they are, they're definitely not Forex traders. You'll see some legit stock traders on there, I'm sure, but actual technical Forex traders almost never exist in this world for some reason. And, again, neither is their audience. The people they are talking to don't know anything about technical analysis. So if you're showing technical analysis to a bunch of people who have no idea what you're talking about, the best thing to show them is something dumb and easy like the RSI. So don't think that just because you see it on TV that it is more valid than anything else out there. They're using it because it's easy. And they're also using it because, again, like all those instructors who actually have studied technical analysis at some point, they don't know any better. They don't know about all the other indicators out there that work much, much better. So let's go ahead and touch on the last reason that I will bet is one of the reasons why you still use the RSI, and that's because you've had some success with it before. And I went over this in the Big Banks video too. It's called blackjack theory or Vegas theory. If you were to go up to a blackjack table for the first time, and on the very first hand, you would have actually gotten a blackjack and gotten that 2-to-1 or 6-to-5 payoff, whatever they do. That feeling is so intense that you would allow yourself to lose the next 5 to 10 hands before ever even thinking to yourself, okay, maybe this isn't the right game for me. And God forbid, in the next 10 hands after that, if you were to actually win 3 or 4 of them, well then, they got you. You'll sit there and lose all your money and take it all the way down to 0 before realizing what's really going on here. And the same can be said for the RSI. The big banks will give you a win with these things sometimes, because if they didn't, then you're just going to quit. But if they just give you a win here and there, it is enough for you to hang on to this thing, because the thrill of winning is so strong that it overrides any of the losses you might have in the future. But if you were to just do this, if you were to just make a separate demo account and do nothing but trade with the RSI and nothing else, and track those wins and losses for 2 months and see where you actually were, I bet it's going to paint a really sobering picture. But most people don't have the discipline to go out and do something like that and to test things that way. They're so stuck in the euphoria of those times where it actually works, they will ignore the times when it doesn't, and when they look at their account at the end of the year, it is way down. So let's transition out of the reasons why you probably use it, and I'll just tell you the reasons why I don't like it. Don't forget the earlier slide, the dirty dozen slide. A lot of times this was a reason enough for most people to say, oh, wow, what am I doing? Yeah, I need to move on to something different. There are clearly better options out there. But let's just say that did not convince you. The RSI does not even do a good job at what it is supposed to do. Remember that example I showed you before where I was trying to show you how well it worked, and it ended up being a complete calamity to your trading account. Often, even when it looks like it works, it doesn't work. And on top of this, it was created for stock trading. I actually know some professional stock traders, many of which will actually use a combination of technical analysis and fundamental analysis because that's what you're supposed to do in stock trading. And none of them use the RSI. Some of them did, but as soon as they were introduced to better options, they got rid of the RSI right away. It did not take long. Sometimes it's just a matter of being shown a better option, which we here on No Nonsense Forex are going to do. So if you haven't subscribed by now, subscribe because you're going to want to see this. Now there is a counter argument to this, and it is an argument I have a really big problem with. They say, well, the RSI does work really well in range-bound markets. In trends, it doesn't work at all. You get murdered. But in range-bound markets, it actually works well. So what do I mean by that if you don't understand what that means? So when price consolidates and falls into this little range right here, and when we say a range, it pretty much means it's hitting a line here and a line here. And when it does that, people want to convince you that now this market is very easy to trade because it's going to bounce off here, and if you're using the RSI, it's going to give you a really nice short signal. And when it comes here, it's going to give you a really nice long signal. Here is the problem I have with this. Guys, you don't know when a range is coming. It'd be so awesome if we did. If we were just able to pick out some random point on a chart and be like, hey, okay, consolidation is just around the corner. Get all your range trading tools out. We're going to make a lot of money. But it doesn't happen that way. You only know it when it's too late. Once you see a range actually forming, it is probably about to end. I love people who show trend lines and support and resistance lines. Like, look how many times this thing has hit this line. By the time it has done that, it is almost over. So understand, this is not an actual chart. This is just a drawing. So how many times did this hit? 1, 2, 3, 4, 5, 6, 7, 8 times. You almost never, ever see that. And if you do, it is only a matter of time before price breaks out of that range and starts trending. And if you're trading a, quote, range-bound market, you are going to get smashed because when price does trend, and you're trying to use these reversal indicators, you get absolutely destroyed. Go watch that reversals video. If you ever want to know why a price trends as long as it does sometimes, it's because there are an endless supply of reversal traders with their stochastics and their RSI trying to call reversals. And as long as those people outnumber the people who are actually following the trend, price is going to keep going. And these poor reversal traders just get smoked over and over and over again. Any money they made when price was consolidating is erased immediately, and then the losses start happening. So let's go ahead and go to my charts, and I will show you not cherry-picked examples, but actually real-world, right now, examples of how this thing just completely falls apart. So here is what I've done. Let's go ahead and push this forward just a bit. This is, well, let's put it back. Even this right here is about 1 year's worth of data on the most popular traded currency pair by far, and we're on the daily chart, which is the time frame that everybody should be trading. If you didn't already know that, that was a podcast episode. I'll link that down below too. But I went ahead and put the RSI down below on the default setting that almost everybody uses, and let's go ahead and see on the world's biggest stage, not some cherry-picked example, on the most popular example I could possibly give you. Let's see how well this thing works. Now, it didn't give you any signals for a while, and then finally gave you a little one right there. So let's go ahead and pull up a cursor and see how well that would have done. Now, it wants you to go short right here on this candle here. Now, very next candle shot up about 70 pips, If you would have stayed in that trade, you're telling me your stop loss is more up here. So by the time it actually did give you some profit, it didn't even give you 100 pips worth of profit on the daily chart. Chances are, like I said before, if your stop loss is up here, your take profit is down here somewhere, and you did not profit on this trade. And if you didn't, look out, because price shot back up right afterwards. Now let's look here. We are now in overbought territory, and you have a signal here. Let's check that one out. That would have come on this candle right here. The RSI is telling you to go short right on this bar. And you didn't make anything. you made 14 pips on the daily chart. Immediately, this thing shot way up again. That would have been a tremendous loss depending on where your stop loss was. Now the next one. This one, it's hard to say. I'm going to be nice and give this one a pass because it's so borderline. But your next one was here, and I think this one actually worked. Let me see. You guys want to zoom in? I think it might be better if we just zoom in on this. So you can see this a little better. This one told you to enter, was it this candle? No, it was this candle here. So this one did go down some, and you probably made a little bit there. You didn't make a lot, but there was definitely room to take some profit there. But it didn't give you that nice trend that you were wanting on the reversal. It came up back up pretty quick. So if you took half off down here, half is all you got because this thing shot right back upwards. So in this little cluster of shorts it gave you, there were some really bad losses and one medium-sized win, maybe. And that was it. So let's move over to here, where now you're getting long signals. This was technically one. It got up there. You can see on that little tag here, the RSI is 30.94. So it did close above that. That would have given you a long signal. Let's see how that did. I don't think it's too hard to recognize that that did nothing but go short. You went long. Price did nothing but go short. That was really bad. Really bad. Let's look at the next one. On that little retracement, it gave you another long entry. Where was it? Right here? All right. Well, how many pips were you wanting on the daily chart? Hopefully you're wanting more than 80, 87. You might have taken a little bit of profit there, but for the most part, you got no trend that you wanted, and you got nothing but futility all the way down again. This thing just keeps on killing you. How about this one? This one was actually good. This was the win. This is the win they used to keep you in the game, because this one from the start did you well. It didn't do you great. Like I said, you won on the daily chart. You were hoping to gain more than 150 pips max. But it did give you a win. And then over here, it is yet to be seen. But let's zoom back out. After all that, all those entries, you had 2 little medium wins and a bunch of losses on the world's biggest Forex stage, on one of the most commonly used indicators on Earth. Terrible. And this is a currency pair that not only trended, but did, quote, range too. Actually, I don't even know if that, can you really consider that a range? There's your top. There's the bottom. It didn't really touch anything. So yeah, a lot of people would call this a range. It's not even a range. And there is no money to be made here. When it comes time to actually prove it, this thing just completely falls apart. All right, we'll move on. So, I mean, have I given you enough evidence at this point? I mean, in conclusion, it's real simple. Don't use the RSI ever. I mean, the good news is there are much, much better options out there, and we're going to be talking about them over time. And I'm going to bet you're going to want to know what those are, and the best way to